Davis, and I was ranked as the second best performing Forex trader in the world by the Barclays Currency Traders Index. Now, of course, this is the risk events video for the coming week. I've spent the weekend making my plans, just going through the calendar, figuring out which economic news events I'm going to be trading, and now in this video I'm going to share that with you, so hopefully you can use that information as well in your own trading and make some pips with me. Okay, if we look at the calendar here, we're going to go to lots of risk events this week, but we're going to go to March the 24th, Tuesday, March the 24th. This is probably the best opportunities for the week, and it's on US CPI, UK CPI as well, actually. There's no specific trade of the week, but we'll call this like the risk event of the week. So we want to watch these CPI figures because we can look to trade out of them, okay? Now, what we need to see is deviation. So first of all, with the UK CPI, this is going to be more prone to negative deviation. It's going to be a bigger move if UK CPI comes out in the minuses, okay? Because if it drops below zero, that's going to be really bad. That's going to really make even the most hawkish UK traders a little bit wary about when the BOE exactly are going to have the courage to hike. So if it's negative, we could see a nice sell-off on the pound. The other reason for that, of course, is all the UK election risks. Lots of political risks on the pound. There's a big black cloud hanging over the UK at the moment. Pound is a very volatile currency to be trading, very difficult to trade. So that's what makes negative data a little bit more, it's more prone to getting a reaction from the pound. However, if we get significantly positive, i.e. over 0.3% or above, then of course, you know, we could get a nice upward move on the pound because that could be positive if inflation is not as bad as everyone thinks. Obviously, there's less hurdles in the way of the Bank of England hiking towards the tail end of 2015. So lots of different things going on, lots of different opinions, but this CPI figure is definitely one to trade out of, provided we get a deviation. Same story on US data. Now, after FOMC last week, Janet Yellen and the Fed did remove the word patient. I had a sneaky feeling that they might not do that. They did. The fact was, whatever happened, there'd be volatility, and there was huge volatility, a massive squeeze on US dollar longs after that event. And of course, last week ended with a big sell-off on the US dollar. Now, the question is, will that continue? The answer to that question is now in US data, okay? It's no longer a safe bet to just buy the dollars because the Fed are going to hike. The Fed have allowed themselves room to change their mind. That's why the dollar's getting sold off. If the data starts coming out negative or isn't as impressive as it once was, the Fed now have got the freedom to say, you know what, the data's not good, we're not going to hike. And as long as that's an option on the table, the market's going to be very wary and it's not as confident as it once was in the mighty US dollar. So what that means is that CPI is the biggest data point of all for any central bank, but now the data, or the focus is on the data. This first figure after that FOMC is CPI. So this is going to be an absolutely huge event. We're looking for deviation. If it comes out above 0.3, 0.4%, we could get a nice positive move on US dollar. Vice versa, if it comes out towards 0% or even in the negatives, we could see a nice big sell-off on US dollar as traders now use the data points to make their decisions on when the Fed are going to hike and how fast it's going to be. So we want to keep a very close eye on both the CPI and particularly the core CPI, because CPI includes the effects of the oil price, which has been falling. Core CPI removes that element and it's still pretty low, it's still 0.1%. So if we get a negative core or a nice positive core, that could provide a nice trading opportunity on the US dollar. So they're the data points, that's the highlight of the week. We want to be focused on CPI from the UK and then later in the day, focus on CPI from the US. That's the